Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin. You know the drill by now. The question of the day, how will we close out the worst week for the market in 12 years? So we'll talk about the continued volatility. We'll discuss as many earnings as we can. A lot of big earnings from yesterday after the close. BIDU, Beyond Meat, Workday, Trade Desk, Big Lots, VMware. We have Wayfair and Foot Locker this morning. We'll talk through news from Bed Bath & Beyond and Cody. I want to talk about L Brands and the reversal that stock had yesterday. So a lot to get to as far as individual movers on the show today. Our guest is Todd Bowley. He's a chief market strategist at earningsbeats.com. He will join us at 8:35. Joel, what's happening here in the overnight session? I bet I can guess.
Well, we got some good news and we got some bad news. The bad news is we're down 20 handles at 29.37 after a week close yesterday. The good news is we are well off that morning low of 28.79 that was made earlier this morning, about 4 o'clock this morning. Crude continues to go the same direction as the market, down $1.30 at 45.79. Gold in the red by 18.20 at 16.24.30. Silver back towards 17 in a heartbeat, down 63 cents at 17.10.5. And Bitcoin not acting well either. Bitcoin down $400 at 8,555. So not a lot of good things going on today.
No, and so I'm so curious now, the fact that it's Friday, I'm so curious how people are going to want to position themselves heading into the weekend. The last 3 days, or actually the last 2 days in a row, we've been higher on the day. At some point in the middle of the day, we've been green, only to reverse and close down. And it happened big time yesterday, starting at like 1:15. We hit the high around 1 o'clock, right, Joel? 1 o'clock, 1:15?
Yeah,
or near
there.
And then the next 3 hours, it was just more or less straight down. So I'm really curious to see what people are going to be doing in the final few hours of the day today, because you don't need us to tell you, there's a lot of anxiety out there. Does anybody want to go into the weekend long anything? I don't know.
Well, it just depends on the headline, Spencer. This is you can't really talk levels, you can't talk fundamentals, technicals really don't matter.
All right, so
it's a headline-driven market, and you just gotta keep your eye on your Benzinga Pro or whatever newswire you're using, and it's very, very difficult environment to trade, or just to be in. But uncertainty breeds uncertainty, and that's one thing that the market doesn't like is unknown, and we have a lot of unknowns right now.
Okay. Do you feel a little bit better, at least the fact that we can say for sure why the market is down? And that is not always the case, right? A lot of times the market goes down, we have to guess. Oh, there's weak PMI in Germany, or weak jobs number, we think. A bearish note by Goldman Sachs says that tech is overvalued, or we're never quite sure when the market goes down why it is doing that. But now at least right now we know, right? Does that provide some sense of comfort to you? Because at least we know, we all are on the same page. We all know the reason why the market's going down. It's not a guessing game.
I think that we were long overdue for a correction, and I've been saying that for quite some time. We were due for a correction, and we really didn't have a catalyst for the correction, and now we have a catalyst.
Yep.
So that's it. It's a headline-driven market. We have a catalyst. Market doesn't like unknowns. I'm probably repeating myself here this morning.
I want to start, before we go into earnings from yesterday, I want to pull up the chart of L Brands, which we discussed on the show yesterday. What a reversal. I was looking around for any green on the screen, and there were a couple of stocks that were green yesterday. L Brands I believe it was one of them. It's reversed right after the open.
I'm not sure if there was any news associated
I mean,
with
they had
this.
the earnings on Wednesday, and the earnings were good, I guess. I mean, the guidance was not, but not sure.
You can make. I just said technicals don't matter. Well, maybe they did a little bit now. Brands yesterday, we had a gap up in late January when they were dumping the Victoria's Secret. Was that right?
Yep,
Yep.
that's right.
And popped up to $25. It looks like, and came down yesterday. We were looking at the top of the range from January 28th, that came in at 2027. So people that were looking for a gap fill, let's see how close it got yesterday. Yesterday, it got there and went to 2061. So little bit of technical analysis coming into play there. Short gap fill, shorts covering, stock trying to get off the mat. Looking at it in today's session, it's down 35 cents. So we'll keep an eye on yesterday's high. That would be a good level, but just above that, folks, if you get through that 23.36, look out for 23.75. I see Monday, Tuesday, and Wednesday's highs at that area. So pretty technical for L brands.
And then one other thing I want to add before the earnings is Zoom. There's two Zooms out there. There is Zoom ZM, which is the software that we use to broadcast the show, and I guess coronavirus is supposed to be a boon for them because nobody's going to want to meet in person. And there's Zoom Technologies, ticker ZOOM. They're not the same company, and yet both were up yesterday.
Yeah, I mean, a case perhaps of mistaken identity.
Yep.
This happened once before
It happened a few times.
Yeah, went to $9. So I was looking at that stock, just because I really, really like the software. When we started doing the show here a few years ago with Benzinga, we really had a hard time because, Dennis and I are in different locations, and it really took the developers a long time. And how many different systems have we been through here?
We used a couple. We did use Skype for a long time, and we weaned ourselves off that. And we've been on Zoom for about
didn't we do something in between? Didn't we do live stream? Wirecast?
Yeah. We used live stream, we used Wirecast, and I think Zoom is the third one that we've used. And
it's fantastic.
Pretty clean.
I can't talk about the the valuation of it,
right?
But from a fun, even I can run the show by myself,
right? And with the exception of a handful of days where Zoom is conked out, it's been 2 years pretty glitch free for us. So
yep, this it's a good product. Street's running with that news right here. I'm not going to pay attention to the other Zoom. ZM, it's down. Is it down? No, I put the wrong symbol.
You put Zoom?
No, I put AM instead of ZM. The street's running with this. It's a story. It's up 537, 118.92. We're trading just at the highs of the pre-market session. That comes in at 119.39. So, what do you have? You have no resistance in the issue?
No.
We'll take a little Dennis quote and say, I've lost more money shorting stocks at all-time highs. Of course, if you want to take some profit taking, or you have a target, to me, the pre-market high is always a good number, and then half and whole numbers, really, you put your orders out there and see what you can get done. But, take your target. If you want to buy this thing, off the open, a gap and go, you're on your own on that one. I'm not sure where to buy the stock today.
All right, let's move on to the earnings parade here. Let's start off with Beyond Meat. They reported after the close yesterday. They lost 1 cent per share. They were supposed to make a penny, so they missed the estimate by 2 cents there. Sales 98.5 versus $79.5 million, so a beat on that sales figure. And they gave some sales guidance for the year that is within the estimate, the range they gave. So it wasn't a bad report.
Not a bad report, just a tough environment to be
very tough
reporting in. The stock tried to break out, was in a consolidation phase. Perhaps if you were trading this in the after hours, if you got a chance, it broke down to the bottom of the trading range at 102.43. And now you're currently down 13.39 at 92.75. off the pre-market low for the session. So that's good news. So if you're looking at possible support, I think the low may be in here, 85.30. Now you've got on the 15-minute chart, buyers are kind of stepping up. 85.30 pre-market low. Whoever scooped that up early, they went out at 95. You can see several 15-minute highs at 95. So pick your poison between 89 and 95 here in Beyond Meat.
And it looks like on the daily we had that base that
It did. Oh yeah,
that we are.
That was a long consolidation after the bump up, and earnings, market environment, a lot of different dynamics at work here for the issue.
Yeah, so it's sort of a shame is my point, because it had that base, and if it weren't for this week, who knows what could have happened. But
yeah, just what do we go from here? We went to 71 to 135. Can't even do the math in my head today. I'm not in the mood to do math in my head. We've had a 64-point rally. You divide that you add 71 to that. We're through the 50% retracement. So if we do get a rip roaring rally, I would use that low of the move at 102 and change, because that's right with the 50%. So if you are so inclined to, look for a rebound on this and it gets back in triple digits, 102, 102 and a half, 103 should pose as resistance.
All right, let's do BIDU here. We talked about this one reporting after the close yesterday. Their earnings per share, $26.54 on a revenue of $28.8 billion. But the earnings per share more than doubled from the same quarter a year ago. Revenue declined, or revenue increased slightly, but the earnings per share doubled, like I said. So the estimates are always hard with these foreign companies. I don't know how they're comparable.
Correct.
But the earnings was great on a year-over-year basis. Revenue still higher on a year-over-year basis.
A couple factors working against this stock here. Number one, it's been in an extended decline since it peaked in early 2018. Came down hard. You made the low of the move. You attempted to rebound, and now all the uncertainty in China still bearing down on the issue. So when and if this thing gets resolved, I'm sure I'll just say when, the stock has not been in a good trend. From a really short-term trading perspective, you did drop to 115. You've bounced off that area. You're $3 above it. So people have stepped up here at 115 on the dailies. I don't know. Monthlies here. What do we see here? I see a monthly low at 113.30. So if you want to bring something in this stock, 113.30 to the pre-market low, but you've already guys know how I look at things. Just kind of, people have been stepping up since you made that pre-market low. So you are finding buyers in the issue.
So we've heard from BIDU. We've heard from Alibaba. The third one, JD, reports Monday before the opening bell. So something to have on your radar for Monday's session here. Let's go to tech. I want to go to Workday here as I pull the chart up and the stock up in Benzinga Pro. WDAY reported earnings this morning. Adjusted EPS 50 cents versus 40 cents. Sales 976 versus $964 million. A beat for Workday.
You don't see a lot trading here in the pre-market.
Yeah,
I see some spotty prints. This is a higher price stock. The thing working against the bulls here is just overhead supply. You're at 200 and 240 just on February 19th, and you've fallen all the way to the bottom yesterday at 166.81. So getting into a rally mode, definitely going to find some overhead supply. Technically, I do like 181, since you had a pair of highs just below that, your 2 and 3 day highs. And then maybe I can do the math in my head on this one. 202 to 167, 77, 87, 97, 35-point move. At 1777, 185 is halfway back on that. And that would actually fill the gap. So there's important to hold the momentum here off the open and plow through that 181 area.
The trade desk, TTD,
Always a
reported
trade
after
risk.
the close yesterday. Their Q4
Nice.
earnings per share, $1.49 versus $1.17. Nice beat. Sales, 215.9 versus $213 million estimate. So a nice beat on that number as well. So beats for both the Q4 numbers. They also gave some sales guidance for the quarter that was above estimates, and for the year that was also above estimates. So better than expected numbers for the Q4, and strong sales guidance for the quarter and for the year.
Same situation, you know.
All these charts,
Yeah,
it is funny, right?
yeah, it's not funny, but
Well, yeah, they all look the same.
it's similar. You had about an 80-point break, getting 40 of that from 240 will put you 280. You are currently trading at 268.50. You got a nice high right there at 282.88, and then the next one at 291.66. For these stocks, I mean, you just want to, you know, if you're going with the gap and go on the upside, you just want to see them, you know, hold that gap and go. That's why they call it a gap
That's why
and
they
go.
call it that.
Yeah, and it's just a simple rule here for, you know, I don't know how aggressive people are being today. You know, I think your opening print is going to be a lot of volume on these opening prints. So if you purchase one of these stocks off the open, it rallies up and then comes back down through that opening price, might be a signal to exit.
I would take any gains I could get in this market.
Yeah. I mean, I don't know. Not a lot of people sitting on gains.
Right. No, I'm saying if you were to like buy it at the open, I buy anything at the open. Buy anything today, I would take any gains I could get in anything that I was buying at
Okay.
all. I want to do Autodesk here, ADSK. They also reported after the close yesterday. Earnings per share beat 92 cents versus 80 cents. Sales beat 899 versus $890 million. Q1 EPS guidance was good. The sales guidance good. Same story for the guidance for the fiscal year. So it was good across the board here.
Not good enough. Down
Wow.
yeah, down 315 off the pre-market low for the session, and you actually hit that pre-market low 2 times. You hit 170.01 initially, and then you came down to 170 even. $7.50 off that low. A couple daily lows in that area. So maybe you find buyers, you know, peeling back here. If you want to get to the bottom of yesterday's range, you need to get done. You're not too far from that. You could easily see a gap fill there, 180.07 and 180.65 was the close. So not out of the realm of possibilities for this to do a little gap fill today.
Let's go to the big loser of the morning here, and that is Big Lots, BIG. This is not the market where you want to have a bad quarter and give bad guidance, and that is exactly what happened here with Big Lots yesterday.
Holy Toledo.
Yeah, that's what I said when I came in. They reported earnings per share last quarter of $2.39 versus a $2.53 estimate. Sales of 1.6 versus $1.63 billion. So they missed on both Q4 numbers. They see Q1 EPS 92 cents versus 95 cents. So they missed on their EPS guidance for the quarter. Their EPS guidance for the year was also light. So they missed on all 4 of those numbers yesterday. Did Big Lots.
I remember having some 40 puts in this thing going off the board. Wow. Let's see how far we have to go back here.
A while.
Uh,
That's a weekly, doesn't do it.
That's a monthly. I mean, where are we at? We're at 1457. Man, I'll have to do some work here. 3 monthly lows in the 13 handle, and then a pair of monthly lows at 12 and a half. Let's see what the pre-market low is here. You know, when you gotta look at the monthlies, it's not
never
a good thing. Yeah.
Or it's a great thing.
Yeah, good thing or bad thing.
Right.
Not showing any signs of wanting to bounce as of yet. So 1450. Maybe see what your pre-market low is, you know, right there at the bell, and do see some monthly lows at 13 and a half and then 12 and a half if you want to try and pick this on the cheap.
All right, we'll stick with the retail theme for a second here. Foot Locker reporting this morning. Q4 EPS beat $1.63 versus $1.60. Sales missed slightly, 2.22 versus $2.25 billion. They did say that their comps were down 1.6% on a year-over-year basis. That's same-store sales. It's never a good thing when your sales are declining, but they beat on the earnings. Let's see what the
It's
chart says.
green. It's green here, up 44 cents, 34 even. Pre-market high 34.24. Trying to bump your head. I mean, you're holding 34 here, so that's a good thing. First target for longs on the upside. That's $1.30 away. So they really want to get this thing going. Really got to get it through. Really get it going, getting it in the 36 handle, because you have two highs coming in at 530 and 585 from the last two sessions. But once again, you got some oversupply here in this stock. It was just over $40 last week.
Yeah.
And so I just have a tape here and just say, yeah, may rally, overhead supply, and then the next chart you show me, I can just hit the tape.
Yeah, it would probably save you a few minutes. That's what I was saying. They all sort of look the same here this morning, and so that's one of the, I guess, if you're looking for positives in a market like this, is everything tends to be highly correlated with each other. Yeah. Correlations go up, which means it's easier to read charts. I want to stick with retail, a different kind of retail. Wayfair, they reported this morning as well. Is this company ever going to make money? Their losses just seem to widen and widen. They lost $2.80 per share last quarter versus a $2.65 loss estimate. So they lost more than they were expected to. Sales beat barely. And I was just looking at the earnings calendar in Pro, and a few years ago that they were losing 50 cents a quarter. Now they're losing $2.50 a quarter. So I don't know about this company.
Wasn't Mr. Laugh one? Did he pick on this one?
He did pick on them, yes.
Yeah. Off the pre-market low. Pre-market low comes in at under $60 at 58.55. And the way this is setting up technically right now, 63.5 is resistance. So see how it plays out in those two areas. From a historical basis here, you did have a couple monthly lows before it shot up at 60.43 and 61.40. So underneath this pre-market low, I would try and peg 61 is a potential support point.
All right, there's a couple more on my list here, not that many more, and then I'll go to the chat. Let's do VMware. VMW reported earnings yesterday after the close. As I pull those,
VMW.
Haven't looked at this one for a while. The Q4 adjusted EPS, they missed that number. They beat the sales number, so a mixed report for VMware. Same story.
Wah, wah, wah.
Yep.
Lows of the pre-market session, skimming along the bottom here. This one hasn't shown any signs of bouncing yet. 123.50 pre-market low. Let's see the volume here. Now this is light volume.
Yeah.
Someone is really pushing this one. This is going to be a wild one because there's just nothing here. Let me see what the total volume is. Holy Toledo. I don't know about this one. Okay. I think if 8,000 shares have come in to drop $12, I think, I don't know. I wouldn't want to be short this one if it turns on a dime, because if someone wants to buy 10,000 shares, I mean, who knows how quickly, unless there's just some icebergs out there. But man, this is a big drop on not much volume after just getting crushed. So I don't know. That's be it short on that one. You just hope it doesn't turn on you.
And then the last one I really wanted to get to, there are a few others, but we can get to them if we have time, is Dell. Dell had earnings yesterday after the close. Their Q4 EPS was $2, which missed the estimate by 2 cents. So we'll call it even. Sales, $24 billion is in line with estimates there. They also announced a $1 billion buyback.
Well, Dell, VMware,
Yeah.
They trade together.
Yep, they do.
230, highly correlated stocks. Dell been on the decline, down 230, down from $54. Man, what do you got on that? I do see 3 monthly lows here in the 38 handle. So if you're so inclined to pick this up under $40, there were some buyers back in the spring of 2018, and for 3 months in a row in the 38 handle. Let's just call it 38.50. Make it easy.
All right. Can you give us the level here, Joel, on Virgin Galactic? It looks like the story is over in this one.
I have a position.
Oh, that's
in that
right.
one,
Still.
so,
Oh, man.
Yeah.
Okay. Then we will ask you to withhold commentary. I forgot about that.
That's okay.
Or I assumed you would have closed it by now. I don't know why I assumed that. All right. Let's move on then to Bed Bath & Beyond. They had some news that they are undergoing. They announced some corporate restructuring, and we know the street tends to like that headline. What's the stock doing this morning?
Now they don't like it very much.
Last I checked, they
Down 24 cents. It did get a brief pop here. We'll look at the range from yesterday. Whew, we got down to 969, and then we bounced, closed at 1028. So you want to go green, stay green. You did get that pop up to 1120. I'm not sure if that really took place on much volume, but let's see how much they like it. If you begin to back and fill here, let's see if they try and defend that 969 low. And what was the low that you had back here earlier? Oh no, that low was 734. So that's quite a bit away. But if the street likes it, it will hold that 969 today.
I wanted to go over a couple of stocks that showed some relative strength yesterday. One of them was Schwab. I don't have any explanation why it closed green yesterday, but it did. And it is one of the few. There was I think 20 S&P stocks that closed green yesterday, something like that. So
I don't know. I mean, for the brokerage industry,
trading volume, and then I also want to discuss Virtue because you would assume that trading volume is up.
Yeah, trading volume's up, but you're not charging any commissions.
Well, yeah, but they're making money on the order flow.
Yeah,
so
I know. Being a little facetious there. It had a good, it had a green candle, so that's a good sign. Good relative strength. Giving it back today though, I'm down 56 cents. So that high at 43 even, man, we're $1.70 away from that. Boom, use that. Support down at yesterday's low at 40.09. That was the low of the move. 40 is a nice round number for the issue. You also visited, you got down to 41.19. That was back in November when you had the big fallout from the brokerages. So good candle from yesterday. Let's get over yesterday's high.
And Virtue didn't quite close green yesterday, but it's had a pretty strong week overall.
Yeah, a correlated play here with the volatility. Has moved up from 15.5, flat here on the session. Big run up. What do you got? A high from yesterday at 1929 and 1901. So you got someone that has some to sell here in the $19 handle, lower $19 handle. Flat on the session right now. I see a little bit of a red bar there. I'm not sure if that was any volume on that or not. Nah, small volume on this one.
Still, this daily does not look good.
It depends the way if you look which way you're looking on the chart here. Not a huge trend line guy, but if you want to draw a trend line, looks different on everyone's chart. But I would look at a trend line from the low of the move at 1434.
So the recent trend.
Yeah, the recent trend.
Yeah,
and that's a pretty steep one. So if you're so inclined to draw a trend line there,
something to keep an eye on for sure.
Yeah. Yep.
All right, something we didn't discuss the other day, and I would like to because Chipotle was one of the worst performers in the S&P yesterday. It closed down, I think, over 10%, and there was an amended 13D filing the other day. I want to say it was Wednesday that showed Bill Ackman cut his stake in Chipotle. Again, we don't know why, but it could be for any number of reasons. But he lowered his stake from 1.72 million shares to 1.6 million shares at the end of last quarter.
Well, I mean, it's going up,
Right, exactly. So again, we don't know why he sold them.
But it's taking profits.
Or when.
Good for Billy. 750 is where you're trading. Bulls and Bears are squaring it off right here at 750. Buyers and sellers are congregating at that area on the monthly chart. What was your low from where? And yesterday's low is right there too. So needs to hold 750. Your next monthly low comes in at 728.
Yeah, I think taking profits is a reasonable expectation to assume that, well, that's why he sold. But again, we'll never really know unless he says. I want to go to Starbucks here. They said they're reopening about 85% of their stores in China. So
Well, that's a good sign.
we talked about this yesterday, right? And they can open their stores, but are people going to go is the question, right? So yeah, it's a good sign that the stores are opening. Doesn't necessarily indicate how business will be,
Exactly.
but it's a step in the right direction. So it's something to think about. And we talked about this yesterday, and I've heard it mentioned on CNBC and on podcasts as well as this is as much of a behavioral thing than it is like an economic one. So I'm very curious to see how long the overhang lasts, how long the coronavirus fears linger beyond the actual spread of the virus, because this could extend. Even if the virus stops spreading today, the fears are going to extend for weeks or months.
75.42 is what you hit in the pre-market trading. That was early. A lot of these lows were made right at 4 a.m., 4:30 when stocks reopen, and I think that's when the indexes are on their lows as well. You're starting to see buyers just come in here, not super aggressive, but you've some higher highs on the 15-minute chart. So that makes me inclined to think 75.5 will be good support if we go in, or support. I don't want to say good support. Is 75.5, and then on the monthlies, I see a 75.65 low. That was back in June, and that was the springboard for the move up to the all-time high at 94 or 97. Nope, 99.72. Boy, that had a quick move in May, June, and July. So keeping an eye on 75.5 in Starbucks.
All right, we're off the pre-market highs, Joel.
We're way off the pre-market highs. The pre-market high was 29.80.50. Pre-market low is 28.79. So just looking at really for technical perspective here, 29.30 is mid-range on the session. So if the bulls want to show that they're in control, they will get above 29.30 and hold it. If the bears still are in control of this market, then they'll keep it under 29.30.
I just want to do one more before we go grab our guest here. Cody, C-O-T-Y. I see a tick higher on my chart, and they announced a new CEO this morning. No volume that I can see, but I do see it probably indicated higher.
They had some good news, and they had a gap and go, and that was faded hard. 13.01. How many down days in a row does this thing have?
Oh,
1, 2,
quite
3,
a minute.
4, 5. 5 is 6, 6 is 7, 7 of 8, 8 of 9, 9 of 10, 10 of 11, 11 of 12, 12 out of 13 down days. So if you're buying this, you're definitely going against the trend, but that's what people have to do to make a trend turn around. 985. We're kind of through that. That was your October 2019 low, and below that, 901. That was your August 2019. Nope, September 901. If you're looking for more downside in this one, and look at this. I wonder if it's our pre-market prep chatters here. I said we got to get over 29.30, and look what they're trying to do. They're trying to bid that market up over 29.30.
All right, let's go to our guest now, Tom Bowley. He is a chief market strategist at earningsbeats.com. Tom, good morning.
Good morning. How are you guys doing?
Doing okay, Tom. It's a interesting time here, and you're pretty earnings focused. What is your assessment of the implications to earnings that best we can tell that this virus could have?
Well, I think at this point it's way too early to tell. I mean, there's experts out there that are a lot more trained than I am in terms of healthcare and what impact this might have. And, it's obviously going to be a big disruption to the supply chain. I don't know how you can quantify at this point. I think, when you look at the market now, and I was on this show with you all back in October, and it was right before the S&P 500 broke out above that 3,025 level. And I was very, very bullish at the time. I believed at the time, and I still believe, that we're in a secular bull market. So I do think that this will eventually pass and will kind of pick back up, but trying to determine exactly where this goes in the short term is going to be very difficult.
Possible, yeah.
Yeah, I mean, I just, when a market gets this fearful, I think you have to pay attention to sentiment. I don't, I'm seeing some pretty good support levels that are just going, being lost rather easily. And I think that's typical when you get a volatility index up near 40.
So how are you approaching this market? And I'm also curious how you're approaching today specifically, knowing it's a Friday, knowing that the weekend, going into a weekend tends to cause some volatility on the close and some anxiety. How are you approaching this market right now?
Cash.
Okay.
Yeah, I actually don't like trading a highly volatile market. I actually tried yesterday. I sent out an email to members yesterday. We saw the volatility index hit 36 in the morning, which was the same level we had hit during the trade war. And so the S&P 500 went down to 3,007 early in the morning, and that went back and fully retested that breakout at 3,025. So I actually sent out a little blurb to members and said, hey, this, if you want to take a shot on a bounce, this would be an ideal spot to do it. And that's what I did. And it looked brilliant for about an hour and a half. And then
until the afternoon.
Yeah, exactly. So I actually put a stop in just a little below where I had gotten in. I had a really nice intraday gain that I saw wiped out in about an hour, and I went right back to the sidelines. I mean, it just, it's a coin toss. It's, you're sitting at a roulette table in Vegas. That's what I feel like when the market gets like this. It doesn't trade on fundamentals. It's not right now. We're not trading on earnings prospects. We're trading on fear.
Yeah, and because it is impossible to know how long this could go, how bad it could be, I just want your thoughts on the market, coronavirus notwithstanding. If that wasn't an issue right now, what sectors, what industries would you have your eye on?
Well, I mean, I believe in growth. I think the actual environment, if we weren't looking at the coronavirus, is Goldilocks environment. I mean, we've got moderate growth in the U.S. Most analysts are looking at growth picking up later this year. You've got interest rates at historic lows. My background, I was a CPA for many years, 20 years in public accounting. And, when you value companies, you're looking at future earnings growth and you're discounting it back at current market rates of interest. And so the environment is one that I've never seen in my lifetime, to be honest. I mean, usually when you get moderate growth, you've got an active Fed that's raising rates. Instead, we've got a Fed that it took them a while. I criticized the Fed quite a bit in 2019, late 2018 and into 2019, because without inflation, there was no reason to be raising rates or thinking about raising rates. And throughout 2019, they finally came around. And once they came around and started turning more dovish, that's when we saw the breakout and we saw a huge rally in stock. So I think everything was set up. And I actually was on record saying I thought the S&P 500 would hit 4,000 this year. And without the coronavirus, I think we would have done it. I think we would have headed for 4,000. Now with this, I just think the uncertainties are too great. But I think once we do get this behind us, and I think we will, then I look for another pretty sustainable rally in the market.
You have to assume the Fed will not be quiet much longer. They're going to do something. Probably, I would assume in their March meeting that they would do something. But I guess we'll see when they meet in a couple weeks here. And it's something to think about, right? It's been a pretty bad a week, but we're still only 10, 11% off all-time highs, more 12% maybe. I mean, we've still gone up for a decade, so it's important to have that perspective. But I've been trying to keep that perspective in the back of my head this week, right? As bad as this week has been, it's one bad week in what has been a pretty good decade, more or less.
Yeah, and a week ago, we were in a completely different spot. I mean, obviously the market's fallen a lot in a week, but last week at the close on Wednesday, there was so much in the money net call option premium heading into monthly options expiration on Friday.
Mhm.
And so, I think there was incentive for the market to actually drop the last couple of days last week. I wrote an article over at Stock Charts about it over the weekend following. So it would have been last Saturday, I guess. And I pointed out I think the Spider and maybe one other stock that just had a massive number of in the money calls. And so anytime you see that heading into options expiration, I always get a little concerned about a short-term pullback. And we saw that last Thursday and Friday. And then, of course, the news kept hitting over the weekend about the coronavirus cases, and the fear picked up. And so it just kind of picked up on itself and really took off this week. And, it's just hard. It's like that big snowball coming down the mountain. You don't want to stand in front of it or just run you over. And that's what happens when the market gets fearful. But I do have some charts that I'd be happy to share with you.
Yeah, why don't you? If you can grab the screen there in the middle and you can show us some charts. I'd be curious to see what you're looking at right now.
All right, it's saying I can't share while someone else is sharing. So
let's try this. You can try that again now and grab a screen and let's look at some charts here.
Okay, so what I did here on this chart, this is the S&P 500, and this is a 15-year chart. And you can see that clearly we've been in an uptrend since that 2009 low. You can go back and you can look back at the 2015, 2016 consolidation back in here. You could look at the trade war and all the issues we had with that, where we consolidated for a while, but eventually we worked through these things and we move higher. I believe that in 2013, when we broke out above the 2007 and 2000 highs, that began this secular bull market, which I expect to carry on for probably another decade. But that doesn't mean that you won't have pullbacks. We saw it in 2015, 16. We saw it again in 2018. We're seeing it now. But what I have on the bottom of this chart is the volatility index. And you can see that when the volatility index spikes, and this is just, the VIX is just expected volatility based on the pricing of certain S&P options. So when you look at the VIX spike like this, it's just telling you the market's obviously very, very fearful. And yesterday we closed on the VIX at 39. And when we look back throughout this bull market, we've only seen about 4 different periods where we've moved above 40. One of those, the last one, was back in early 2018. And that's where we had that first big drop. And you can see that marked a pretty significant bottom for a while. If you go back to 2015, when we hit that low back in the summer, late summer of 2015, that again marked a very significant bottom. In 2011, summer of 2011, same thing. We got up to about 50 on the VIX, and then the same thing in the second quarter of 2010. My point is, fear tends to create significant bottoms, major market bottoms. You might see a little bit of movement below, and you can see each of these. We had a couple of periods down the road where we went a little bit below, and maybe 2018, the fourth quarter of 2018 was the one exception where we went quite a bit lower than the prior low. But these tend to mark very significant bottoms. So I don't know how low we go with this move. I actually was taking the highs because I think I like to follow channels. And I was taking the highs and using that same slope to mark some pretty critical lows throughout the period, which we pierced right at the end of 2018. I call that the Jay Powell breakdown when he came out infamously in December and said that not only were they raising rates, but they're going to raise rates 2 more times in 2019. And I wrote a blog that same day at Stock Charts, and in my opinion, said that they would not raise in 2019, and they didn't. And in fact, they ended up cutting in 2019. I agree with your comment. I think that the Fed should absolutely act, and I wouldn't even wait until the March 17th, 18th meeting. I think that they should come out right now and cut. There's no reason not to. There's no inflation. I think everyone agrees that this is going to have an economic impact. Why wouldn't you cut? The bond market's screaming for a cut. But the 2 lines I drew here to the bottom, one is connecting a couple of pretty important lows, and then the other is just off of that 2009 bottom. And you'll see that actually coincides pretty closely with the lows that we saw at the end of 2018. Now, for me, I think that's a worst case scenario, but I have seen the market do some crazy things when the volatility index gets up to 40 or 50. And the only reason I didn't go back into the 2008 period, I mean, I think that was, number one, a secular bear market where we already had a lot of fear, and then a potential financial system collapse. I don't look at the coronavirus in that same light, at least not based on what I know now. So that's one of the charts that I certainly, think is worth paying attention to. The same chart, I actually smoothed out the VIX. So over on this other chart, you can see all of this in this daily back and forth. Over at Stock Charts, for those of you who are Stock Charts members, under the indicators, I have the VIX and the equity only put call ratio. And if you put in the chart style invisible, and then have an overlay of the 5-day or whatever, however many days you want, you can get it smoothed out a little bit. And you can see right now the 5-day moving average of the VIX is up to about 27, but we have seen multiple times where we've moved into the 30s. So I'm not so sure that we're quite there yet. And then the equity only put call ratio, normally we see that spike up into the 0.8, 0.9 range over a 5-day moving average. And that's currently sitting at 0.75. So even though it's been fearful and it's been a horrible week, I think I hate to say it, but I think there could be a little bit more room to the downside before we find a bottom.
Have you adjusted your year-end target?
I think it's too early to. If all of a sudden someone comes out and says, "Hey, we've developed the vaccine," I know it's going to, maybe take some time. But I think if something like that were to happen, because of the low interest rate environment, because I think a lot of that would get rid of a lot of the fears, I think the stock market would move higher very quickly. For me, knowing what I know now with all the fear out there, I think it's going to be an uphill battle to try to get to 4,000 on the S&P by the end of this year, based on what we know right now. If things change, I think that's still possible.
Tom, question from our chat here. He wants to know about the calendar day performance spreadsheet and the method you use to calculate annualized return.
Okay, actually, I'm going to change screens here just for a second, but let me just bring this back. I only have that blank screen there for you for 1 second, because I didn't ask anybody to ask this question, but I've been talking about it a lot, so maybe it's one of our members.
Well, grab the screen back.
Is it not showing there?
I just took it. I took it back.
Oh, I'm sorry. Okay. All right, you got me?
Yep.
All right, so what I've done, I keep a history. I have an Excel spreadsheet that tracks every day on the S&P 500 since 1950. It gets back to my analytical background as a CPA. But I just wanted to go through and try to find historical periods. At first, I just wanted to see if there were historical periods where the market performed better than other periods. And so I've got an interesting calendar here on the S&P 500 by day of the month. So when I show the first, second, third, this isn't just February. This is the first, second, third of every month of the year. And if you look at the annualized performance column, this is really the big one. You can see that the first day of calendar month has an annualized performance 46%, then 34, 25 on the second, third, and so on. If every day was created equal, the S&P 500 has had an average annual return of about 9% a year since 1950. So what you would expect is, okay, if every day was equal, you'd see 9% going right down the line. And what you see here is anything but that. And I summarized down here at the bottom 4 different periods. So the 26th to the 6th, which has an annualized return of almost 21%, which is more than double what the S&P typically sees each year. The 7th to the 10th, minus 5.55%. The 11th to the 18th, 14.3%. And the 19th to the 25th, the worst period of the month, minus 8.78%. And that gets back to the options expiration that I was talking about earlier. The market tends to go up throughout much of the calendar month, and especially during that 11th to the 18th period. Well, options expire the third Friday. Monthly options expire the third Friday of every month, which could be anywhere from the 15th to the 21st. And so what I've seen is a lot of market weakness either heading into option expiration week or sometimes the week following. And so if you notice, the weakness last week started on the 20th. The 19th was last Wednesday. So we started seeing the selling on the 20th, the 21st, and then we escalated this week when we typically see some historical weakness, seasonal weakness. So I think it's a good calendar. I wouldn't trade off of this. I don't use this as a primary indicator, but I think that this is a good secondary indicator. In other words, if I feel really good about the market and I'm looking at it technically and everything's lining up and it just so happens to be the end of the month, then I would say that this would be just one more factor that would make me a little more bullish.
So are any of those weekly periods skewed by a particular month? Like 20% of the end of the month, is that skewed by December? Seems like it could be.
Well, it's probably a little bit skewed by December, but also the 19th to the 25th, which is weak. December, actually, the 19th to the 25th is not that bad. So December actually lowers it a bit. So there are some subtle differences. The one thing I would point out is the worst day of the month is the 19th. And if you recall, Monday, October 19th, 1987 was Black Monday. But even if I strip that day out, the 19th is still the worst day of the month. Even if I took that out and didn't even consider that day, which I think we were down 25% or some crazy number. But yeah, I mean, I think that there are some trends. And the reason for these trends, the 26th to the 6th, I used to audit companies when I was in public accounting, and a number of my clients had pay periods that would run, say, the 15th and the 31st. And so what they would do is they would collect 401k money from their employees from those pay periods, and they would remit them to the Vanguards of the world. And that would happen on the day after payroll. So from the 15th, it would be the 16th. And then from the 31st, it would be the 1st. And that money would get wired to Vanguard. You know, Vanguard doesn't sit there and say, well, you know, the market looks a little toppy here, we're not going to invest your money. Vanguard has a duty to put that money to work. So a lot of this, when you look at the 1st, which is the best day of the month, and then look at the 16th, which all of a sudden jumps to 35%.
Yeah.
So you've got money flows that come in. And I think the reason why you see the market do well ahead of those money flows is because Wall Street knows the money's coming in. So it's kind of a legalized form of front running, in my opinion. I mean, you know, if you're a portfolio manager, you're going to wait for the money to come in and then buy more expensive, or you're going to buy ahead of it. I would buy ahead of it.
That makes sense. That definitely makes sense. We're getting a question from another one asking where they can find this chart.
On my computer.
Oh, okay. There's the answer.
If you write
Bowley's computer, everyone.
If you write to me at tom@earningsbeats.com, I don't know, maybe I'll share some of the information. I tend to save a lot of this stuff for our members.
Yeah, all right.
Because it is proprietary information.
Tom Bowley is the chief market strategist at earningsbeats.com. Tom, thanks for the time today. And I guess good luck in these markets, and good luck out there.
Yeah, I'll just point everybody, I do write a blog every day over at stockcharts.com. Well, not every day, but probably a few times a week, trading places. So if you go over to stockcharts.com, go into the articles area, you'll be able to find me there.
All right, thanks a lot.
All right.
All right, 8:53 here, Joel. There's a couple tickers from the chat that I want to get to. Apple being the big one. We haven't discussed Apple, I feel like, for a couple of days. What is the market leader? How is the market leader leading us here?
At this point, it is leading us lower.
Yeah.
We are at lows of the pre-market session, down 1188. Let's see, we're right at the lows of the session, which is 272.96. Man, oh man, let's see. That move in 2000 in January went from 142 to what, 328. Oh man, I don't even want to figure it. 328 minus 142, 186 point rally divided by 2, 93. You add that to 142. That comes in at 235. And we're trading above that. So
good sign for now.
Yeah, I mean, you could pick some daily levels in between there. I do see a couple daily lows at 68.5, and then a couple at 265. But folks, I'm giving you levels here, but this technical analysis
takes a backseat.
Is really, I mean, it could be good, and you can think you can see things and stuff, but if you've been in the markets, a lot of it's just feel
Yep.
and knowing when you're right, knowing when you're wrong. I can unequivocally say that we need the volatility to come down. I remember when we were ratcheting up. I mean, we got to a point where we had 13, 14, 15 point daily ranges. And, that's now what you need to use as a stop in the S&Ps to give yourself a shot. So until the volatility comes down, and until we consolidate, and maybe going back to technical analysis, a double bottom, a triple bottom, or something like that. But the news is going to dictate when the volatility comes down. The charts are only going to tell you afterwards, what's happening. And I've seen this. I mean, doing my levels the same way since I've been doing the financial crisis. And when the average trading range are expanding, there's not a bottom. And people, like, you could have easily said, and I think I saw a lot of people yesterday, we hit 29, or not 29. I'm losing track of handles here. Dennis would call it handleitis. We hit, I believe it was 30.06, and we went straight up 85 points. We went to 30.90 and change. So that's not the kind of rally I want to see. I want to see lower volatility, and it's just, we're not there yet. That's when the market's going to turn, and it's all predicated on the news.
Right.
So
that's a great point. Technicals take a backseat. Trend lines, all of it is good to keep an eye on, but is not going to lead us anywhere.
No, I tell you afterwards.
Right,
Like, I could tell you what the low of the day is from yesterday, and we're below the low of the day. I could tell you what the pre-market low is, and you could. I think the best way, if you're if you're trading these, it depends what you're trading. I mean, you want to go into momentum, so if you're shorting, a lot of time, you want to short on the way down. And then if you get yourself in a profit area, then put your stop in. I've been getting some pretty good fills in the market. So don't be afraid to put your orders out there. You'll get done, right, wrong, or indifferent.
And then I just wanted to get to a couple more from the chat. Netflix, you would assume a global pandemic would be good for a company like Netflix. No?
I mean, you could say that. I mean,
sure. Doesn't mean the stock's going to behave that way, but you could say that.
It looks okay.
That's what I'm saying. That's what I'm saying.
I can't argue with that. Not, made a new high since in late 2019. So it is holding up. I would use your close as resistance. What was your close? Well, this really came off. Your close at 371.71. You had your daily low right there as well at 370.60. Below that, maybe take a look at 365 in Netflix. But yeah, Netflix shareholders should be really happy. We were talking about the Bobster yesterday, Alibaba. That is been I talked about it yesterday, kind of holding up, and on a relative basis, it's still kind of holding up. Looks like we are going to breach 200 today. We are trading below 200, so it'd be good for Baba. Maybe get that dip below 200 and then come back above it. But
all right.
The way the market's acting right now, it doesn't look like that's going to happen.
Last thing we'll do, last one, AMC. This one I don't really understand. AMC Entertainment. So this is the movie theater, not the network. And they reported earnings yesterday. The earnings on a year-over-year basis were up. The sales missed. They reported a buyback of $200 million, and they're cutting their dividend from 20 cents to 3 cents.
You talk about virus plays, antivirus
plays.
Yeah. Based on also the stock's been in a downtrend, but it's up today.
That's what I'm saying. I don't know.
2-day high, I'd look at 662 if you're looking through follow through there, trading at 663. So above yesterday's high, above that, a pair of highs. In the $7 handle, between 714 and 728, let's call 721. Next stopping point if you can stay above that 2-day high of 662.
All right, that is going to put a bow on this week. Dennis will be back on Monday. If you want to catch any part of today's show or any previous show dating back to like 2015 or so, you can go to a podcast on iTunes, SoundCloud, Stitcher, TuneIn, Spotify, or watch the show on youtube.com/Benzinga TV. Thanks to our guest today, Tom Bowley. Thanks to everyone in our chats, both on YouTube and on premarket.benzinga.com for a free 2-week trial and a subsequent discount to Benzinga Pro. It's our real-time news platform. Click on the link in the description of this video on YouTube. You can always give us a call, 734-494-0246. Email us, premarket@benzinga.com. And please remember, all the information from our show is meant to be used as informational purposes only and not for investing or trading advice. Everyone, seriously, be safe out there. Have a good day. Have a good weekend. We'll be back with you, all three of us, on Monday morning.